I think there's a real possibility that we're entering a longer term bear market, unfortunately. And this is, on the one side, of course, a 4-year cycle that everybody starts to talk about. But what we're seeing is actually US stocks tend to perform quite poorly during midterm elections. And of course, next year is a midterm election year.
Break the cycle of exploitation, break down the barriers to truth, break into the next generation of privacy, break free. Free to scroll without being monetized, free from censorship, freedom without fear. We deserve more when it comes to privacy. Experience the next generation of blockchain that is private and inclusive by design. Break free with Midnight. Visit midnight.network/break-free. Looking for the best way to unlock your crypto's liquidity? Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Take out a crypto-backed loan in the Figure app today. Hey everyone, you're watching Markets Outlook. I'm Jen Sanasie. We are getting close to the end of the year, and we had to invite Markus Thielen back. He's the founder of 10x Research, and he's been a regular guest on our markets show this year. Markus, here you are again. How are you doing as we head into 2026?
Yeah, great to see you again. Doing fantastic. I think it's been a, eventful year. Up, down, sideways. I think a lot of stuff has happened. I think there's always so much to say about crypto. So many moving parts. So, very excited to talk to you again.
Well, let's reflect on 2025. We talk about up, down, sideways. Talk to me about some of the major events that kind of defined 2025 for you.
Yeah, of course, it was the Trump inauguration, the Trump coin, where all the exchanges nicely listed the Trump coin really near the top, provided really massive exit liquidity. I think that had a massive negative impact on the sentiment. And I think, we came then into February where Bitcoin was trading in this like descending wedge really. And, we were turning, bearish. I mean, I had no idea, of course, how bad the tariff news was, but that, we were coming in quite negative just from a technical level. And then we were breaking certain things. And of course, we just sort of like ramped up again. So we caught this move then later as well. But I think last time we spoke was kind of like midsummer. And what we noticed back then was, of course, a lot of the OG selling. And of course, the last couple of 2-3 weeks, basically, everybody talks about OG selling. But of course, the game has changed once again. And I think that's really quite interesting how crypto is so fast. So crypto is never boring. And I think that's really exciting.
Crypto is absolutely never boring. Some stats from November showed that whales are starting to accumulate again after a lot of that OG selling that you were talking about. What do you think that means?
Yeah, I think it's a very interesting statistic because what we have seen really that the Bitcoin market itself has been in an equilibrium from the large OG sellers really. And that's really the wallet cohorts holding more than 1,000 BTC. The buyers have really been the Bitcoin ETFs, the MicroStrategies of the world. And we know that, for example, MicroStrategy and BlackRock, they hold their BTC in around 500 different wallets. So they fall into this 100 to 1,000 whales category, but not in the mega whales that starts really at 1,000 BTC. And we have really seen this massive distribution from the mega whales, which are tentatively the early investor, the OG investors, to the whales, which are the newer investors now, because, they can only buy 100 or 500 BTC per wallet, really, and then they spread it out more evenly. And I think that's really quite an equilibrium that we have seen taking shape over the summer. And that's really where we are arguing that volatility is going to get crushed. And with crushing volatility, we're going to see an unwind really of this whole digital asset treasury company, momentum really because of the lower volatility. And I think that was a key feature then for us to really recommend more or less the selling upside calls and downside puts because we were expected to stay in the range. But then the whole game actually changed end of October. And that was really right the time when a lot of people suddenly were talking about the OG selling and people were kind of, defending them. People were saying like, how could they do this to us? They should have just been holding forever. But in the end, actually what happened end of October is when Fed Chair Powell turned unexpectedly hawkish and almost clearly ruled out that there will be a rate cut coming in December. That's actually when we saw that the Bitcoin market actually jumped into an imbalance really, because suddenly the ETF buyers turned into massive sellers. So of the 14 trading days following the FOMC meeting, we have already seen $4 billion of outflows, and it's no longer just the OGs that are selling. It's really the whales that are also selling. And the whales are really, as I was saying, the newer entities, the BlackRock, IBIT, ETF basically holders, but also other entities that fall in probably like newer investment managers, investment funds, and so on. So our big theory here is that investors probably have decided, we are overexposed in Bitcoin. ETFs have bought around $24 billion worth of Bitcoin year to date. Ethereum ETFs have bought another 10 billion. Ethereum is down right now, middle of November. So Ethereum is down 10%, Bitcoin is down 4 or 5%. So this is like $36 billion of capital deployed really in the market, but it's not making any return. And that's why we think probably institutional investors are selling here, because it's very difficult to defend why they have such large positions when the market is not performing.
Well, let's unpack that a little bit more. Do you think there is an almost institutional fatigue? And when will we see institutional investors come back to the ETF for Bitcoin and other crypto assets?
So I think it's a very important question here. When are these, institutional investors, these ETF buyers, are going to come back? When we look, for example, Bitcoin is marginally down year to date, but the ETFs have net bought 24 billion. So it's almost like they're $24 billion too long here. Of course, they will not sell 24 billion. For example, in March, April, they only sold like 5 billion. So it wasn't really that much, but now they sold already 4 billion, 14 trading days after the FOMC meeting. But nevertheless, we're coming now into the end of the year, and it's probably not where a lot of institutional investors are going to put on a lot more risk. And it's not really that you need to bargain hunt Bitcoin here as long as the Fed is not really dovish. One of the key reasons, for example, institutional investors, hedge fund managers bought Bitcoin was really because of the dollar devaluation trade that was supposed to happen. But of course, the US dollar has gone sideways. It has not gone down anymore. So the rationale for this trade is really not there right now. And I think end of the year, institutional investors are probably more focused on cleaning up their books and taking more risk. And I think what was also very crucial was, of course, the October 10th crash that we saw, where Bitcoin went down from 122,000 to 102,000. So it was a $20,000 decline. And I think that brought probably to people's mind that, yes, there can be a lot of volatility in Bitcoin, even intraday, even on the weekends when no institutions are really in the office. And it's because Bitcoin doesn't have circuit breakers like other listed institutional futures, basically. And I think that's why we probably go into January, wait there for the next FOMC meeting until they turn a little bit more dovish. And if that doesn't happen in January, then we might actually get into like March, and probably that's sort of like the time.
I want to talk a little bit about the SOL and XRP ETFs. The XRP ETF launched by Canary Capital, Bitwise's SOL ETF. The two of them took the first and second spot for first day performance out of all ETFs launched in 2025. But yet XRP and SOL's price performance didn't really mirror Bitcoin's price performance after the launch of that ETF. Can you give us a little bit of insight there and how you expect some of these alternative asset ETFs to perform as we move into 2026?
Yeah, all these alternative ETFs, the second, third tier crypto coins or tokens, I don't think there's going to be a lot of success. I don't think there's going to be a lot of marketing spin. I think we even have seen that Ethereum was struggling, except, the 2 months where basically BitMine was really just, lifting the market. But of course, we know also that BitMine is down $3 billion on their investments so far. And I think it's very interesting when you just look at the Ethereum ETFs inflows, $10 billion, but it was just basically in 2 months, and the rest was like nothing. So it's very difficult to see how investors really would jump on, XRP, on SOL, or any other, these coins, because institutions are not buying those. Institutions getting the narrative, of course, of Bitcoin as digital gold, but not on the other value propositions.
Well, let's talk about that gold outperforming Bitcoin this year. That narrative as Bitcoin as digital gold, is that one that you think will continue to remain and have momentum?
Of course, the narrative that Bitcoin is digital gold will going to be staying with us almost like forever, because Bitcoin was, of course, invented as a peer-to-peer payment system. But, since the upgrade in 2017, it actually has become digital gold because the block space has actually become, small, and therefore it cannot really be used as a payment system. So it's definitely only a storage system. And of course, that's a story that BlackRock has been communicating, while they have not really pushed the Ethereum ETF, I would argue, because we haven't really seen consistent inflows. We haven't really like a big marketing push from them. And I think the story is really that institutional investors are not too interested in, buying Ethereum or any of the other stories. But I think what's very interesting based on our analysis is actually that Bitcoin is more dependent on actual money flow. And I'm not talking about global liquidity that everybody, tries to argue, because that metric is, I would say, is not really too relevant over the longer periods, because everybody just shows the chart of the last 18 months with sort of like a 13-week lag, mysteriously, because it doesn't really tend to work much longer. And it goes through periods where it works, and then it goes to periods where it doesn't work. And those periods last, 2 years where they work and 2 years where they don't really work. And it can also be negatively correlated, because it doesn't mean if the central bank prints money that the money goes automatically into Bitcoin, but there will be some trickle down effect. What's more important is, of course, the actual inflows through stable coins, liquidity in the market, futures open interest, increase, something that we can actually really measure for the crypto market. What Bitcoin measures then is really this, the whole market structure, liquidity. And of course, we can see a lot of the stuff in the on-chain signals. But the difference is that Bitcoin, again, on liquidity versus gold is actually more anti-US dollar trade. It's really the inverse when there is interest rate cuts, when there is projection of interest rate cuts, and not necessarily that Bitcoin reacts to it. It's really the difference that gold is really a monetary asset versus Bitcoin is a liquidity asset. And a lot of people kind of mix these two. This sort of reminds me that, money printing is the same as inflation. And of course it's not. But I think that's something that people also mixed up kind of like during the COVID crisis, basically. But that's how we look at it. And I think that's why it was a little bit clearer that Bitcoin would maybe lag a little bit, would be driven by other factors, versus gold would be probably more the direct anti-dollar trade, the trade that benefits if the central bank cuts interest rates, if the Fed is more dovish. But of course, it's a big tailwind for Bitcoin if it actually happens, if actual liquidity comes into the market.
Looking for the best way to unlock your crypto's liquidity? Figure is exactly what you need, being the largest non-bank mortgage lender in the US with over $19 billion unlocked on their lending platform. Explore their industry-low crypto-backed loans at 8.91% interest rates at 50% LTV. They differentiate themselves by offering decentralized MPC custody, which protects your crypto ownership in a segregated wallet. They've also recently launched liquidation protection, which protects you from liquidation during large price drops. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit their app or click our link below to take out a crypto-backed loan with Figure today. What's your Bitcoin price projection for the end of 2025?
Well, end of 2025, I think we were among, we were actually the most conservative ones. And I think our analysis was based on liquidity. So we projected initially 140, while everybody else was 200 or much higher. We already indicated during the summer, the last time we spoke, that this 140 might actually not be achieved. And it's going to be difficult because it takes so much capital of net inflow, really. And this is what we said earlier, is really the difference, or the overhang from the OG investors, from the mega whales to the whales. And I think we probably struggle here further into year end.
You mentioned some of those big calls, the 200,000, 250,000 by year end. And you just mentioned BitMine just a few minutes ago. I believe Tom Lee is still calling for $7,000 ETH by the end of the year. Do you think it's realistic?
Well, if the price target for end of this year is 7,000, I mean, that's super bearish for him, right? Because he was expecting 16,000. I think this is just, for example, unrealistic, because there's only one buyer of Ethereum this year, basically, and this has been BitMine, and nobody else was really following, BitMine, really, and nobody was buying into the narrative, because I think the narrative is also, a little bit flawed, because it's not really that Ethereum benefits a lot if there is a lot of stable coins being issued, because very little value actually accrues to the Ethereum network. Ethereum is currently not, widely used for DeFi applications or anything. It might be something in the future, but I think right now it's really not there. And I think that's sort of like the misconception. I think a lot of crypto people are not really buying into it. And I think the narrative is really also not, resonating with Wall Street yet. I think people kind of like see how actually little value really accrues. And I think it's the same argument if OpenAI would be, listed on the New York Stock Exchange. I should buy US dollar right now because in the end, the shares will be trading in US dollars. I mean, that's sort of like, I think, an argument that not many people have followed. And I think it's just very interesting how, it was really able to push up the price in the summer. But then again, it was just 2 months and then it sort of it all, crumbled down. And I think here it was really a nice management of SEC filings, and it was very difficult to analyze where the NAV was or is, and it was a pipe shares. I think it was like really interesting way done. I think we couldn't figure out. I mean, because there are like 100 SEC filings, for example. It's really difficult to catch up. And for example, how much management team is getting in terms of 1% every year. That's like 100 million payout. So I think there's just all these things where people sort of are kind of like they want to see that really extra yield is being generated. I think even for a lot of the other digital asset treasury companies, I think they can generate yield, but it's no longer like in the past where you depend really on retail exuberance, where you really depend on the wide NAV premium. Really, I think it's more kind of like hedge fund institutional style asset management where you use call options to override your positions, where you manage it around. And you can probably still generate 10 to 20% yield, but you have to be a lot smarter, a lot more financial market savvy than capital raising savvy.
If we look now to the end of 2026, what's your Bitcoin price projection there?
I think there's a real possibility that we're entering a longer term bear market, unfortunately. And this is, on the one side, of course, a 4-year cycle that everybody starts to talk about. But what we're seeing is actually US stocks tend to perform quite poorly during midterm elections. And of course, next year is a midterm election year. That's usually where the S&P doesn't do, a whole lot until really just shortly before. But it also coincided with the last 3 major bear markets for Bitcoin. And Bitcoin actually has tended to go down by, around 60% on average during those years, unless we really come into a period where inflation prints lower, where the Fed becomes really incredibly dovish, which there might become with a new Fed chair. But I think there might be like a little overhang where it might be really tough for the market to really find its footing here. And I think it's also that we might have actually missed a lot of the institutional buyers, and they might really not return until there are some other opportunities, especially if the equity market goes sideways. I think it will be very tough. But it's not just a 4-year cycle. It's not just the midterm elections. It's also we're seeing a lot of the data in the on-chain data. When we look at the MVRV or the futures open interest indicators or the realized versus the market cap indicators, I mean, those are like all have been turning, since October. And this is when we provided to our subscribers various presentations, various research reports, where it became quite tricky because once we broke this 112,000, I think that was really like a big level. And what's really also interesting, I think what people don't really think about, yes, we had this huge distribution over the last couple of 6-7 months where literally millions of Bitcoins were moved from the OG wallets to the newer wallets. But the newer wallets are all underwater now by 10, 20%. And at one point, they just have to sell. And I think that's sort of like very difficult to see how they have been the only real buyers, those newer whales. It's really interesting how they're going to pump in even more money into the market when they're already down so much, because I think it's very difficult for an institution to justify to adding even more and more money into a losing position, no matter if you're like bullish over the medium to long term. But historically, in these midterm election years, we sort of like go up, we go down, but we sort of like grind lower. And it seems like we are slowly going into this rhythm because there's not a lot of support for the market overall. I think one of the big disappointment was, of course, that some of these IPOs that were launched, the crypto IPOs, they were not really that successful. I think, unfortunately, they were not the right companies that were launched to bring really this retail exuberance. I think that we wish we could have seen. I mean, we calculated beginning of the year that we could see something like $130 billion in market cap being IPO'd to really build this sort of like digital asset sector But of course, so far we have only seen that, Coinbase has been selected in the S&P 500. We have seen Robinhood, but not a lot of whole other crypto companies. And I think these IPOs, which were of course mostly exchanges being listed, are not really the ones that people really drive really the big momentum. So I wish I would have seen somebody like Kraken, with bring a lot more retail investors into the market.
Marcus, a lot of folks are looking to the passing of the market structure legislation in the United States as a catalyst for the markets. But it sounds like what you're saying is even if market structure legislation gets passed in the coming months, there are a lot of other factors here that are going to hang on the markets.
Yes, I personally don't think that the market structure bill is going to be such, like a momentum where a lot of retail investors or institutional investors allocate capital. I think that the market needs more stories, needs more narrative, and nothing really happened. I think when you look also, with the Genius Act, which is of course well timed with the Circle IPO, but also Circle has come back, massively. And I think similar with BitMine, there was a lot of investors from Korea. I think Korean investor, put in like $1 billion in BitMine. They put, I think, $3-4 billion into Circle at one point. But of course, they have withdrawn some of the money, and that's why the stocks has gone down. And I think it's really that even those market structure bills, if it would come, and I think it would not really drive new momentum, because the market really needs new stories. It needs something like a Coinbase IPO that we had a few years ago. So maybe, Binance can IPO or something where people really resonate, themselves with. And I think, that the market really lacks these stories. And then, of course, the institutional investors might be just a little bit burnt here, because the futures traders, the perpetual, crypto native ones, they quickly sold. So they are like flat in terms of leverage year to date. Bitcoin is sort of like flat, just a little bit down. It's really the ETF holders that have, as I said, 24 billion pumped into the market, which is doing nothing right now.
Marcus, thank you so much for joining me, reflecting on the year, unpacking your projections for next year. I hope you have a great December and Happy New Year if I don't see you until next year.
All the best to you too.